I'm Tolulokwe Adeleru Balogun. This is our headline story. South Africa's Monetary Policy Committee forecasts. Now, the COVID-19 pandemic has bitten hard on the South African economy. However, with the country's Reserve Bank monetary meeting, it is expected that the major challenges bedeviling the country will be addressed in addition to the repo rates being maintained at a record low. It's been a week of Monetary Policy Committee meetings across the continent. Will South Africa follow the trend of most MPCs? This and more on today's show. Welcome. This is Business Edge. After some African central banks cut to record lows in 2020, most have reached the limit on monetary policy easing, and an extended pause in key rates seems likely in countries where there is less severe pressure on exchange rates. Monetary policy committees in Ghana, Nigeria, South Africa, Kenya, and Angola are unlikely to follow those in Brazil, Turkey, Mozambique, Zambia, and Zimbabwe just yet when they announce their decisions on interest rates in the next few days. We've looked at Nigeria and Ghana. Now it's the turn of South Africa. The Reserve Bank Monetary Policy Committee is meeting today, and economists have predicted that the focus will majorly be on the anticipated inflation outlook and the bank's economic growth forecast relative to the potential output. The SARB's inflation forecast presented in January will possibly be revised upwards, mainly due to global oil price developments since the last meeting. Now, some economists have stated that the Reserve Bank will keep its repo rate at a record low of 3.5% at the March 25th meeting and at the same level until early 2022. According to data recently released by Statistics SA, retail trade sales fell in January on an annual basis for the 10th consecutive month, declining 3.5%. I have Ecos Akpokvayan joining me from Johannesburg, South Africa. He is the Chief Investment Officer of Ovid Capital. Ecos, it's good to see you again. Thank you for joining us.
Thank you. Good day, Tolly.
All right, so we've seen the trend of MPCs across the continent holding their rates steady for the most part, and that's been happening this week, and there are still a few more meetings ahead. Before we focus on South Africa, have there been any surprises for you regarding the outcome of the majority of these meetings?
Look, we were informed that there were a few meetings between several Reserve and Central Bank governors within the continent, and South Africa was part of that. And there was a general understanding because of the impact of COVID and what is happening in the continent, there's not a lot of growth to try to keep the rate low and steady. Of course, we're going to see the rate announcement later on today. I expect nothing to change. I expect the rate to remain the same. And the reason is that although the South African Reserve Bank maintains the repo rate within 3 to 6%, and currently the rate has reduced. The rate now we have is about 2.3%, and that's below the targeting that the Reserve Bank uses. But when you look at February data and January, there was a ban on alcohol sales, and which usually takes the rate up. So if you take that away from there, you see the inflation went up because of the increase in oil prices. So what we are thinking, and economists are saying, if there was no ban on alcohol sale and beverages, would have seen the rate somewhere within 3% within the target of the Reserve Bank. Okay. So we don't expect the rate to change because nothing has really changed in the economy. The economy is still picking up, so we expect the rate to change. And we don't think there will be any room to reduce the rate right now.
Okay, so you're basically telling us that even though the consumer inflation accelerated at the slowest pace in the past 8 months, nothing really has changed, and the expectation is that the Reserve Bank will keep that repo rate. And their target has generally been, as you said earlier, between 3 to 6%. Why does this target work for South Africa, even though right now, as you currently said, it stands about that 2.8? Why does that 3 to 6% seemingly work for the Reserve Bank over the times?
Well, since the South African Reserve Bank started its rate targeting in 1995, it had maintained that culture of using that target 3 to 6%. either to reduce or to increase. Is the inflation targeting to increase or reduce the repo rate? And that's how it's been. There was pressure from some political quarters to remove that and to change it. But the South African bank has been independent and the government has not interfered. And so far, it's better this way to be stable. Some people are calling for radical change, but I think it has been stable and it's been working. So it's better to stick to that.
Okay. So in the last 3 meetings, we know that there has been a split between cutting and holding involving the 5-member panel. There are those who want to cut and there are those who want to hold the rate. And there are concerns about inflation. And so people are looking at how they'll likely vote now. And as you said earlier, many also are projecting they'll likely unanimously vote to have an unchanged stance. But looking at these previous meetings, why do you think the holding rate versus cutting or keeping it steady? Why do you think it's keeping it steady that seems to keep winning versus the cutting? Have they reached the limit in terms of cutting? What else can be done? So steady, cut, but right now we've seen in the past few meetings, it is steady that has won out. Why?
Look, the different factors that affect the decision. And one of the major factors is the strength of the rand and what the rand does internationally. With other currency, especially the dollar. And also, you also look at the petrol prices because South Africa is not a oil producing country, it imports a lot of oil, and that also affects. So yes, I know some people would like to see rate. When you look at other countries, they're able to reduce their rate, bring it down, but we don't have that luxury in this country. And we, you would like to remind those who are not economists or people in business. For example, you look at the indebtedness of the country when you look at this rate. South Africa is really indebted. South Africa has a debt of $1.4 trillion, and in that we have over close to 300 billion unsecured debt. So when you take this decision, you understand you don't have the luxury. It looks nice to some people just to keep reducing the rate. It's the lowest we've had for a very long time. It's the lowest rate we've had. And there's no room to reduce. And then when you look at investment, you can see all the investment are going to high yield bonds and there's no investment trickling in. Of course, you see there's no growth. You would like to increase the rate. There's no room for that. And there's no room to reduce the rate even when the economy is suffering. So the best thing to do most likely is to leave the rate as it is and see how the pandemic pans out, how the vaccines rolls out, how the economy begins to recover.
And in terms of leaving the rate as it is, there are now projections that the repo rate in South Africa will remain at 3.5% until early 2022. Do you agree with this as an economic stance for the country?
Look, some economists are thinking that inflation will be steady at 4.5% within that range. And when you look at inflation being within that range, it's not increasing and it will not surpass 6% from now to next year. If it remains like that. So, those rates, you look at them and you look at inflation and how the economy is going to perform. From now to 2022, there's most likely the rate will remain like that. But I don't think it's something we should just really celebrate because we need to look at other things that happen within the world and within the South African economy. For example, when you look at the dollar versus the rand, one of the problems we have when we have low oil prices, then we have a weak rand. And then when we have high oil prices, we have a strong rand. So sometimes we need to have a strong rand and weak oil prices to gain that return in the economy. So there are different factors that are not in our control that we look at in order to make the rate. But for now to be safe, I also see the same for the rates to be stable on 3.5% for a while.
So I want to be clear that the factors that you're looking at are also what will serve as justification for keeping the repo rate at 3.5% for at least the coming year. Oil factor, that's the oil that you talked about, weaker, stronger rand as it may be. Of course, issues around investments also coming in. What else might be used as justification for keeping the repo rate at 3.5 for another 365 days possibly?
When we say 2022 may not be exactly 365 days, but close to. Look, we expect to vaccinate the population. We're still in a pandemic right now. There's a lot of talk about having a second wave, and if that happens, we see what is happening in Europe now. There's been a lockdown, so the part of the economy we're worried that we don't go into another lockdown. And it's hard because South Africa is an emerging market. It cannot attract a lot of direct investment the way larger economies like the US we attract, and we can see that. So there will be capital outflow. So we are hoping for the best. So when you look at the economy as performing due to the pandemic, then you begin to worry. But so far now, what we are seeing from today, that will be stable from now towards the end of the year, and things will begin to pick up. But at that, we don't see those factors mitigating for a strong increase in interest rate. Although once we start to see that, then we think the economy is doing well. Okay. But just to maintain the economy is going to be flat for a while.
All right, let's take a quick break. When we come back, we still have some issues to take a look at. In terms of other things around, Nigeria, in terms of other things around South Africa's MPC meeting. And of course, we can't talk about South Africa's economy without talking about South Africa's Eskom. Electricity will be part of this conversation in just a bit. Do stay with us. We're still looking at the issues and possible outcomes for today's South Africa's MPC meeting. Now, there are those that believe the MPC would look to take advantage of the accommodative global environment to maximize the stimulation that they can give the economy via low interest rates. Ekos, take us through how this would work. Are you seeing that the global economy is now looking a bit more accommodative enough so that there is a positive knockdown effect for South Africa?
Can you repeat that again? I didn't get you clearly, sorry.
So I said there are those that think the MPC will take advantage of the accommodative global environment and use this to maximize the stimulation that they want to give South Africa's economy. So are you seeing an accommodative global environment, one that South Africa can benefit from right now in this instance?
Look, I don't necessarily think it's accommodative. It's just the situation. It's the way it is, and there's nothing that we've not known when you look at towards the end of last year, and when you look at this year, the only thing that is surprising is the third wave. But we always knew that would be. So there's nothing that has really changed. The only thing that has changed, which we knew, was the stimulus that the US had coming into the US economy. But there's really nothing that, on my view, there's nothing really that has changed to the advantage. We are looking at our economy locally, and I think they will be making those decisions. What was concerning for them was to look at the region and to make a regional decision. I think that's what the MPC will be doing.
Okay, so quickly before we look at manufacturing and electricity in South Africa, we've seen that the Federal Reserve in the United States has signaled that U.S. interest rates are likely to remain near zero through 2023. Lower for longer global interest rates also means that African central banks possibly won't be forced to tighten policy in a bid to keep local assets attractive to offshore investors. So someone would ask, why is it that I should be interested in how low the U.S. Federal Reserve keeps interest rates in the U.S. and how that can have an impact on what African central banks are doing? Can you help us make the connection here?
First, I see, the markets, they think differently. Sometimes you'll see the market listening to the U.S. governor, Federal Reserve governor. Sometimes the market don't believe. And this is a of a lot of money, liquid coming into the world economy, especially the US economy. We saw the European markets, we saw the Asian markets. They're thinking that inflation is going to drive that rate increase very near in the future. And our African central and reserve bank governors are watching as well. Of course, you look at what the governor says and you look at what the investors and the market is doing. So that's very important to look. You have to look at it too and see if what is happening in the markets and what the governor is saying is happening. So, of course, you can see clearly the markets don't think that the rates will stay the same for a long time. It's going to increase because there will be inflation.
So let's talk about mining, which is a very, very big plus for South Africa. But unfortunately, mining production declined 6.2% year on year in January, while manufacturing outputs declined 3.4% on an annual basis in the same month. Mining and manufacturing are key to South Africa's economy, but the challenges of Eskom have weighed on them even before COVID-19. So what is the latest in terms of government's plan regarding Eskom? What do we know right now?
Eskom, look, there are a few things that were supposed to happen to Eskom. One of the things was Eskom was supposed to be split into three entities, generation, transmission, and distribution, to help to make Eskom effective. And there are a few things that have happened. Eskom has continued to struggle. There's still load shedding, and this is mainly due to corruption and old equipment. And the government has made, this present government has made Eskom a huge priority towards the economy. And one significant thing that happened, we saw this early in January, late December, was that the Western Cape won a court bid for them to be able to generate power independent of Eskom. And we expect that to roll in several provinces in the country. And this will help companies not to rely on the poor performance of Eskom.
Interesting. So when you talk about this, and you said you're expecting more regions or districts or whatever to take up this same drive, what is the knockdown effect? Because Eskom is also dependent on those who are paying it for its lackluster services at the point. Eskom also has debts outside of South Africa. Is South Africa's government pursuing these debts that are also regionally based as well?
Look, Eskom has been a big trouble. Of course, everyone wants Eskom to succeed.
Yeah.
The problem with Eskom and government is that because of the past, Eskom has a mandate to help to bring the gap between the former and the new, and those who had advantage in the economy before are not. So once you have that kind of mandate, you cannot run as business as usual, and that has been the problem. And that's why some politicians have been calling on Eskom to stay one. But this keeps creating debt, and Eskom is not being run as a business efficiently. But at the end of the day, the economy has to grow. And like you said, companies and provinces like Western Cape, they really want to grow. They're pulling out of Eskom. Of course, it will affect Eskom, but Eskom is affecting the entire economy. So you want the economy to grow, you want jobs to be sustained, you need growth. And if Eskom is pulling you back, there needs to be, something has to give way. In the long run, it could affect Eskom, or in the long run, it will make Eskom, start to compete and put the acts together. We saw this kind of competition with Telkom, which is the telecom, government telecom. And the area which they dominate is the main undersea cable. But in terms of the services for internet and direct internet service providing and telephone, we've seen competition, and most consumers have left telecom to patronize other service providers. So you're not trapped, and the same thing will happen to Eskom. Eskom has to find a life for itself at that time.
Okay. So finally on this, you did mention South Africa's debt earlier, but now we're also hearing that the Treasury is possibly considering taking on more debts because of Eskom. So it seems that the South African Treasury is considering whether it would be better to move a chunk of Eskom's 464 billion rand debt into a special purpose vehicle, SPV, or have the state take over responsibility for it directly. Ecos, do you think that the South African government can afford to take over the debts? What are we doing? Because with Eskom, it's difficult to have a conversation about moving South Africa's economy forward if you're not talking about this electricity. An industrialized nation runs on electricity. But can the government afford to take on parcel, whatever amount of Eskom's debt in order to sort of see some progress made?
I don't think the government can afford to take Eskom debt. What is wrong is Eskom is not something that is magic. It's something that we all know. And one of the basic things is corruption and mismanagement. When the new CEO came in, he promised to reduce Eskom debt in 1 year by 50%. It was about 400 billion. He promised to reduce it to 200 billion. That has not really happened. Of course, for him to have come to say he could do that, that showed there was a lot of wasting, and that was possible. I think instead of taking on that debt is really trying to fix Eskom. The government cannot continue to take on this debt and be a big brother, but it turns bite in the economy. So there's no room for that. I mean, investors are not blind. They can see. Once you fix your house and there's no corruption and you can put things back together. And of course, just like I said, Eskom has a low rating for it to be able to source capital elsewhere in the world. Eskom is also having junk. In the past, Eskom could raise money, but when you raise this money is being wasted and due to corruption. Then you have to fix that. Once you fix that, then we see how it progresses. I think Eskom is in a better hand, but there's still a lot of pressure and political interference, and that should stop. If the government takes the debt, they cannot afford to take the debt. They have tried with South African Airways, is also a big problem. The South African Broadcasting Service is also a big problem. We also have Transnet. Well, of course, Eskom is the biggest problem, and the government cannot continue to do this.
Okay. And finally, so let's come back. We circle around to the MPC Reserve Bank Monetary Policy Committee meeting that's happening today. You're not expecting any big changes. You're not expecting the repo rate to change. So it's just basically going to be almost a copy and paste of their previous communique from the last meeting. Is that what we're expecting?
Yes, that's what we're expecting. Let me just say this. Let me just take you back a little bit to South African history just quickly. During 1994, when the new government came with Nelson Mandela, South Africa was in recession at the time, and South Africa had difficulty. What the president did was to have a team, went around the world, was able to attract investment and investors, and South Africa started to grow. When Mandela left in 5 years, Thabo Mbeki took over, and South Africa was seeing a lot of growth. In fact, South Africa was growing so much, and the cry at that time was that it wasn't getting to the grassroots. And there was a call for Zuma, and we all knew what happened. So, President Ramaphosa tried to do the same thing by appointing the current DG for the economic team to go around the world and raise money. Of course, the DG left, and we don't know what happened to the economic team. But I think that's what South Africa needs to do. South Africa is well placed. It's shown it's done it before. It's very diverse. It's a very good country. It's very attractive. A good tourism environment. It can put on a strong team with the president, finance minister, go around the world, COVID or not, try to raise investment, try to plead its case, and we'll really get ourselves, a big foot out of this mess we currently find ourselves in this country.
All right. Thank you, Ikos Apovayan, for joining me on Business Edge. We'll see you again soon.
Thank you.
All right. And we'll be wrapping things up with NC4 to watch, starting in the western parts of the continent, where Nigeria's Debt Management Office has announced that the federal government bonds for March, worth about 150 billion naira, which were auctioned on Wednesday, were oversubscribed by 183 plus billion naira. The total subscription received from investors for the bonds were 333.48 billion naira, comprising about 65.25 billion naira for 16.2884% of the federal government of Nigeria March 2027 bonds. Moving on from there, in a bid to encourage private investment in various subsectors, Somalia has signed an agreement with the International Finance Corporation to help boost public-private partnerships in the country. The accord aims to help in improving the delivery of services, creation of jobs, and enhancement of economic wealth. Majid Al-Fatiam, the shopping mall community's retail and leisure pioneer across the Middle East, Africa, and Asia, has launched its free click and collect service across its 4 shopping malls in Egypt. The introduction of the digital offering addresses the rise in demand for online services by offering customers the opportunity to shop, order, and collect their purchases at their own convenience. And finally, Kenya sets its eyes on the power trade business with recent efforts to improve its grid network to connect with its neighbors. One of the 2 major grid networks, the Olkaria-Lesos-Kesimo network, will be completed by the end of March 2021. The 308-kilometer line, financed to the tune of about 16 billion Kenyan shillings by the government of Kenya and the Japanese International Cooperation Agency, will evacuate geothermal power from the Olkaria to Kasimo through Lesos. And that's it on this edition of Business Edge. Don't forget that you can, of course, follow us on social media. We are at News Central TV. Go to our website for more. Go to YouTube for more, and also watch us live on StarTimes channel 274. Don't forget, download our mobile app and take us with you anywhere you go around the continent and across the world. Until next time, I'm Tolulokwe Adelaru Balogun.